Welcome back. This is Squawk Box Asia Side on a Friday morning. We've got the Palin-Biden-Veep debate ongoing in Missouri right now. We'll continue following that and dipping in and out. But the other thing, of course, markets are focused on tonight is whether or not the House is going to go to a vote on the $700 billion bailout package, which, of course, passed the Senate just yesterday. Our next guest says the package, which is known by its acronym TARP, is a waste of capital, waste of money, and just won't work. Damon Vickers is Chief Investment Officer at 9 Points Capital Partners, joining us live on the line from Seattle. Damon, good to have you with us. Why will it not work, and why is it a waste of money?
Great to be with you, Martin. We've got a wave, a tsunami event of debt engulfing the whole planet at the same time. This is not an issue that clearly is just limited to the United States. It's sweeping over the entire planet. And
okay, but I mean, at least the U.S. is doing something about it. I mean, the situation is even worse over in Europe, is it not? They can't agree on anything, much less get a package together.
Tell me how throwing gasoline on a burning house ever helped anybody inside. We've got a bubble that was created with phony baloney money and IOUs. How does creating more IOUs and creating more debt solve the inherent problem, at least in the U.S. economy?
Okay, what is the alternative then?
The alternative is taking that $700 billion, or now $800 billion, or maybe 1.5 or 2 trillion or more before this thing all ends, and putting it into things that are vital for the re-engineering of the U.S. economy. We don't manufacture cars that are competitive. Our largest automakers, including General Motors, which we are synthetically short on, are not making products that are really competitive or that the U.S. citizens want. People look at the technology sector every day of the week, and we're still talking about personal computers and companies like Dell Computer and the rest, like that's technology. That's not technology anymore. We need to be investing in renewable, sustainable technologies that create competitiveness and that the world needs and so desperately wants, and be a leader in that field, as the United States has been.
Okay, what we're talking about, Damon, those long-term strategic investments into technology, and I mean, I guess it's debatable whether or not the big three in Detroit should be allowed to fail or not, but wouldn't that money be better spent? I mean, if you're going to argue this way, wouldn't it be better spent giving it to homeowners who are suffering right now?
Well, I mean, here we are. We're on CNBC, and we're broadcasting to investors. I'm sure investors have once or twice bought stock on margin. And usually when you buy stock on margin, you put up 50% and you borrow 50%. The Americans, at least, and I'm guessing this is happening around the world, because at least in Canada, they're still buying homes with 5% down.
Yeah.
This trade has gone bad. This trade is continuing to unwind. Real estate is continuing to go down. And these bettors that bet on real estate put 5% down, 95% against the bank. This trade has already gone bad. Now, in the terms of margin investing, with the first margin call that you get, you don't meet. You're already wrong. You're supposed to liquidate the position. Now, here what we're doing is we think the more compassionate thing to do is to pump more phony money into the system. That doesn't change the fact that real estate's going to continue to go down, and that we're going to be out in the future looking for more money to fund this bad trade gone wrong, which is real estate.
Okay, but I mean, a lot of people think the TARP is going to end up being the granddaddy of all carry trades, because if Treasury can borrow at 3 to 4%, buy stuff that'll yield them up to 12%, that's a 9-point spread. That's a lot of money in the bank.
Mm-hmm. Well, you may be right, and those sound like very attractive rates of return.
If you can sell it for that much, right?
Yeah, I don't know, Martin. I mean, we've had a great year. We shorted Lehman and AIG, and more recently Sallie Mae. We're currently short General Motors and 3M, and this thing's just unwinding. It's going to continue to unwind. This is a bad trade. We know from Asian experience that when we look at Japan, that bad real estate trade went on for 10 years, and Japanese real estate went down 90%. Yeah. I don't know that U.S. real estate is going to go down 90%, but I wouldn't be surprised at all to see it go back to 2000 levels. And that'll take us down another 30%, and that will be more than a $700 billion injection.
Ouch.
We're going to keep on fueling this thing.
All
and
right.
the problem really isn't it affordability, Martin? I mean,
Yeah.
if there was enough demand for the supply and the price wouldn't be going down.
Yeah.
Clearly, the market got overvalued,
Okay.
and it needs to adjust.
Okay.
And here's the federal government wanting to step in and support prices that are literally unsustainable.
No, true. I mean, some people have called sharp, essentially, price controls. Damon, we got to go. Great to talk to you, though. Thank you for your time and also your ideas. Damon Vickers is Chief Investment Officer at 9 Points Capital Partners, live on the line out of Seattle in the state of Washington.